The proof is in the pudding. The markets are going to gravitate to liquidity, but you have to know how to define that. It's session liquidity first. First and foremost, it's session liquidity. What does that mean? Well, the morning session, the afternoon session, the lunch macro. If it's going to retrace on whatever move it was in the morning, what's it going to be? Move against the trend that was happening in the morning session. Find the easiest low-hanging fruit low. If you can trade that and find profitability that yields enough of a payout for you, then take the trade. But there's lots of trades that pass me by all day long, where they're only 10, 15, 20 handles. I can do them all day long. I don't care about them. They're constantly there. They're like a McDonald's or a 7-Eleven. They're on every corner. Drive down the road a little bit more, you're going to see another one. I'm not worried about them. I'm stopping at the bus stops, like where my wife's standing there. If I see my wife standing at the bus stop before I met her, I'm stopping at that one and say, honey, you need a ride because I'll take you where you got to go. And you're going to enjoy the ride. I'm not slipping in Mickey D's fast food drive-through, okay? I don't slum it like that. I'm looking for the best setups. I'm looking for the things that make sense for me because I'm not a micro lot trader. I'm not a one lot trader. I'm in here trying to get something. And I want my time to yield to me a bountiful harvest. I want something that's going to be worth my risk that I put on, but also deliver gangbuster results, like bang. Like Emerald Lagasse, remember him? He used to bam, put his spices on it. He was fun to watch. Otherwise, it was kind of boring, but when he did that, it was great. What's another one, ICT? We already know about the silver bullet. Okay, first percent of fair value gap. It's going to form. It is absolutely going to form in the first 30 minutes. Or it forces you into a silver bullet at 10 o'clock. So what have I done? I've basically encapsulated that first hour trading between 9:30 and 10 o'clock. I'm sorry, 9:30 and 10:30. That first 1 hour trading, that is all I've been doing in front of you. Consistent, isn't it? Boom, boom, boom. Calling every candle. Boom, boom. Running to where I said I was going to go. Boom, boom, boom. Never missing a beat. Boom, boom, boom. All of a sudden, you start thinking to yourself, man, this guy's got his stuff together. Look at this. I mean, he's like consistently telling you where it's going to go. Yep. And you can do it too. I'm trying to tell you, I've already taught these things to you, but how much time have you spent working with it and blocking out everything else? That means everything else I've taught on my YouTube channel. Focus on one thing, folks. What happens if the first percent of fair value gap forms in the first 30 minutes? But price just keeps on running away and never comes back to it. Just throw it away? Just abandon it? Nope. Absolutely not. Wait till 10:30. 10:30 is that first hour trading. In that first hour of trading, you have the bulk of all this large influx of big conglomerate liquidity coming into the marketplace. It's shoved into the marketplace in the first hour. That's why there's so many opportunities for price to move around and gyrate. But after that first hour, if it's a trending day, it's obvious after the first hour. And it just continues and continues and continues until the close of the day. But as a trader that's looking for setups using the first percent of fair value gap, obviously, if you're bullish, you're looking for session relative equal highs. That's either going to form between 7 o'clock and the opening about 9:30, or London high or London low. You got two choices there. Which one has a relative equal high or relative equal low? Hello. Hot damn. That's easy. That's easy. That's real easy, isn't it? It completely removes the ambiguity, doesn't it? Now, you would have figured that out if you would listened to everything I said to focus on per session. But because you're out there looking for the next shiny object that I'm releasing all the time, you're never spending enough sufficient time working with what I already taught you. Can you teach me how to do a bias? It's easy. I did it again here, and it'll go largely ignored. It'll go largely ignored. Nobody will look back and see how many times it tells you exactly what to do. But you're worried about Am I going to do a Telegram session? Am I going to ever do a live stream? Am I ever going to do this? Am I ever going to do that? I told you I could stop. You already have enough. But what happens if it keeps running? It never goes back to that first resistance fair value gap. In the first 30 minutes, a fair value gap that forms on that 1 minute chart that has displacement. It's obvious. It's showing itself, not some little micro separation. If it never comes back to it before it starts running, wait till 10:30 because you have the first hour trading behind you now. Between 10:30 and 11:30, you have now London close. ICT, we're talking about SPOOs, bro. We're not talking about cable and fiber, currency futures, and that type of stuff. We're talking about why does London close have anything to do with this? Because that's what markets do. They're coded to offer a retracement back down into a fair value. And that's how I teach you, and I've done it. I've done it in front of you. You can't deny that. I've shown it to you. I've walked you through it. I've called it out in Telegram, and you've seen me trade it. Live funds, baby. Pulling back into what? First presented fair value gap. Oh, yeah. How about that? It doesn't have to be the propulsion stage or springboard to put me in the trade. Sometimes it's going to run without me. I might be looking for that first presented fair value gap to get me on the trade. And the market says, not today, ICT. Okay. Okay. I got you. No problem. Do your thing. I'll be waiting for you when you get to 10:30. And when you walk yourself inside my crosshairs, I'm going to hug the trigger. And I'm going to drop you. And I'm going to take my profit inside that first presented fair value gap. At least the very first partial will come out there. If it's on a day where I think it's going to go lower, why would I want to see it do that? Because in London, there's relative equal lows down there they left generously. That retail's going to say, man, my stop is so protected underneath there. Ain't never coming back there until it does. Expediently. Daily highs and lows. Previous day's high or the last highs in the last 3 days. Because power 3 is not limited to just how one candlestick forms the open, high, low, and close. Power 3 is spreading out when we look at these books, buddy. It's going to be real interesting. Swing highs form and swing lows form with 3 ranges. Whatever time frame you're looking at, it requires 3 ranges. Now you can have equal highs with no wicks, and that could become a turning point. They require something else that I'm not going to teach here because it takes a little bit more time to go beyond that, and I'm going to be escaping here in about 10 minutes. But a swing high and swing low requires 3 ranges, whatever time frame you're looking at it under. If you're looking at it on a daily basis, you have to know what the last 3 days high and low have been. If you don't have that information, you're ill-equipped and not informed. Because those pools of liquidity are gold mines. They are so influential over what price is going to gravitate to. It's nuts not to know what they are. How many times have you seen me call at the beginning of the week, here's where price is going to start gravitating to? It's several hundred handles away. And the market runs up. It's right up there, falls short about 80 handles, creates a swing high, and then it plummets. And you're thinking, look at this guy, wrong. I can't wait to go on Twitter. I can't wait to go on X. This guy is such a failure, blah, blah, blah. And it just goes down to something as a discount that I'm trading in front of you, calling it in Telegram, and then I'm running it up into that target. I love those setups. They place that swing high there just below a target that I know is a draw on liquidity, which is an old daily high, which is a previous week's high. No, that's not earth-shattering. No, I didn't invent that. I didn't say I did. But all you yahoos out there that want to talk smack all the time, you literally don't do it because you're looking at something else. And you're posting, here's my $700 win. Here's my $500 win. What are you doing, ICT? An annual salary. Just saying. Just saying. Swing highs that form just below or just above draws on liquidity that I've shared openly with you Look at what I've been teaching you. Look at the ones I've shown you. Why have I brought them to your attention? They're fitting the criteria I'm outlining here. Previous week's highs and lows. That liquidity is enormous. It's enormous. They're all time-based setups. They're, they're never going to hide the daily high from you that was yesterday. They're never going to be able to do that. They're never going to be able to do that. But in Forex, they can. Compare all the major brokers for Forex. Look at GBP USD. They're never going to agree. They're never going to have the same high. They're never going to have the same low. That market, especially right now, has so many disadvantages versus the futures market. The futures market, everybody has the same high. Everybody has the same low. So that means every bit of liquidity that's going to be above the high is concentrated at that high's price and just above it. You cannot have that same affinity in Forex because there's a disparity. And when you look inside how those brokers operate, they have smaller little pools where they're trading against their clients. I could show you that because I had brokerage accounts through GFT, which I don't even think they exist anymore. They shut me down when I mistakenly talked out loud when I was on the phone. I said, I was letting my son trade one of the accounts. And they're like, what did you say? I was like, yeah, I was letting my son, he was, I'm trying to teach him how to trade. And he goes, well, you're not supposed to do that. And I was like, well, just pretend you didn't hear it. And he finished the conversation with me. And immediately they sent me notice that, they closed the account. Okay. But I found out because I had multiple accounts in that brokerage firm, those highs didn't agree. Just like FXCM. Remember them trash brokers? Remember that trash broker FXCM? Same thing there. Multiple accounts, friends that were trading too. Their highs are different from mine. I'm like, what in the world? Wow, that's way different from what I got. You don't have that problem when you're trading futures. NASDAQ's high is NASDAQ's high. But having that pool of liquidity, it's time-based. It's time-based. You're never going to be able to hide it from you, ever. They're never going to be able to hide it from you. New week opening gaps. You've all fallen in love with them, haven't you? They're like magnets, like black pools. No light escapes them. They suck in everything. Beautiful, isn't it? Isn't it beautiful? You can see how they just go back and forth, gravitating to this one, to that one. There's so many setups intraday that you can take with that. And you don't even need a bias. You don't even need a bias. If it's in close proximity to a new week opening gap high or low, and it creates a fair value gap that's bearish and the new week opening gap's lower by 20 handles or a little bit more than that, you have an easy bread and butter setup right there. Oh man, it's easy. That's easy. At the end of this year, I'm going to give you a challenge going into next year. Don't do it now. Next year. I want you to try to go into the day with a demo account and always be in the market. You got one contract, micro contract, and I want you to constantly stay in the market for a set period of time, the entirety of the AM session, or the entirety of the PM session, or the London session. Or if you're really gung-ho about it, the entire session. A lot of people don't have the stamina for that. But I've done things like that. I've conditioned myself to do that. Constantly, I got to be in a trade. If I close, it's only because I'm reversing. You want to learn how to really get a feel for price action? Practice like that. And you will be a maestro in market structure. And you will run circles around anybody else out there that has a title that they work at this firm or this, I'm a Goldman, I'm a this, you're a goober, okay? You can't do anything. Because if you could do it, you'd be out here moonwalking in front of everybody doing it, but you ain't. You're laying on your title. Who cares about that? You're trading other people's money. You don't even suffer the real losses when you have a loss. So what's that really telling you? New day opening gaps. The opening range gap. They're all time-based mechanisms. These things cannot hide from you. And when you strip it down and say, okay, I'm going to look for the setup that runs into a new week opening gap. I'm going to forget everything else that ICT ever said. I can see this happening every day. When your weak analysis, W-E-E-K, not W-E-A-K, your weekly analysis suggests that we're going downtown for a while. couple hundred handles. And you see intraday after a rally in the morning up, and it's starting to break down, starts to roll over a little bit. Now you see that we're just hovering above a new week opening gap, whether it be this week's new week opening gap or last week's new week opening gap or anyone in the last 5. That is a no-brainer trade. They're going to be such an easy ride. Low resistance liquidity run, right down to new week opening gap high. That's it. Don't try to get in there and get fancy with the constant encouragement of it. Don't try to get the whole new week opening gap. Same thing with the new day opening gap. If you use these as little magnets, you're tossing your coins in the direction of that magnet when you put a trade on. Sure, not every one of those coins are going to be magnetized and gravitate right to it. You might miss a little bit of the move. Even if you get close to it, it's just like in horseshoes. If you get out in the direction of that new week opening gap or new day opening gap from where you entered, if there's a difference that allows you to make your ends meet, your car payment, your car insurance, pay for your groceries for that month, you know what you're doing? You're eating. And in this world right now, that's number one priority right now. You're not about getting rich. That can happen over time. But you got to learn how to eat by your own hand, not the person you're getting a paycheck from each week or biweekly. You got to learn how to do this on your own. And you have enough tools now. You have enough things from my repertoire, my arsenal, but you aren't doing anything with it constructively. You have to strip it down and say, okay, when am I able to do something in the marketplace? And which one of these tools am I going to use to draw on for liquidity? Because that's the secret, folks. You want to know the secret to trading? Where is it right now, and where did it come from? Where did price just recently come from? Did it just run below a swing low? Okay, if it did that and you have relative equal highs above you, you have a 90+% chance that that thing's going up there. Even if it fails to go up to the relative equal highs, you have something that will yield you opportunity to take something out partially. I posted something this week and I said, if you start framing the risk in trade management around your first potential profit, where you take a partial, and you should know what that is before you even put your trade on. If you're rushing in there, oh, I gotta get in there. You're not doing what you're supposed to be doing. You should already know where you can get out with something, even if you are wrong. But you don't want to hear about that. You don't want to admit that you're probably going to do it wrong. Let me tell you something. The reason why I'm not doing every day in Telegram is because there's a whole lot of manipulation going on in the market right now. And me against the hand's going to win. That's just me being real. I know where my limitations are, but I also know that the market can't stay like that in perpetuity. So I'm just chilling. I'm being real quiet, reserved about what I'm doing privately. I'm not placing my stops publicly. I'm not telling everybody what I think it's going to do right now, because I'm in here trying to make ends meet too, right? In a way. So what are you going to use? What are you going to have your core model wrap around? What is it drawing to? It's not your entry mechanism. I have 80 plus of them. The ones that are constant, that always agree all the time, no matter what I'm trading, what model, are these periods of where the market creates this pool of liquidity. Inefficiency or liquidity. And they are perfect. They're perfect in their understanding of how it's going to draw price at that time. If it doesn't draw to them and it starts to move away after I enter a trade and it says, no, I'm not interested in going down there, then it's easier for me to cut the bait and say, okay, I'm going to take the loss here. I won't let it take my stop loss. It gives me clarity. A lot of you ask these questions that I've answered without actually addressing them, verbatim. A lot of the questions you all send me in my comment section or post to me on X, I have answered all those things in the natural delivery of the content. But you're looking for a way to avoid 500 plus videos when not all those videos should be looked at right now. Why all of you are still studying the old stuff when I've been presently calling it live right now is beyond me. I don't understand that. Like that, you stand in front of a magician, a world-class magician, and you're there to learn how to do and perform magic. And say, listen, David Copperfield, hey, listen, which one of your old CBS broadcasts do you recommend that I watch to learn from you? While he's doing a workshop for free every single day. It doesn't make any sense to me. That shows me that the person that's asking that question or trying to do that has clearly no idea what they're getting involved in. They're not prepared. You're not even ready to be doing anything in the marketplace. If you're thinking like that, like imagine going to buy a car. It's a used car, but it's a vintage muscle car. It's decked out. It's been well preserved. And you say, hey, look, I'm here. I'm interested in your car. Okay, you want to test drive? Nah, nah, nah. I want to look at what other cars you have. How'd you take care of that? It doesn't make any sense. Where's your focus? If someone's going to show you the goods, prove it to you in front of witnesses that this is how the market's going to deliver price. And they have rule-based ideas. And it says, now watch how the market gravitates to this level here. My teaching style is I'm not going to put you in the trade. I'm going to show you where the market's going to go. Why did I do that? Because I know that all of you have a different personality that's going to lead to you seeing a bullish order block, and you have no affinity for the fair value gap. You don't know how to pick an order block, but you can see a fair value gap, and that's your model right there. Or, hey, I only trade breakers, bro. Breakers are nothing. Okay. I'm allowing you as my students to bring that personality, that choice of PD array. There's nothing that says that PD array is better than the other one, unless you want to mathematically define it by which one formed first and how much it yields to the target. That's the only way you can adequately say which one's better. And I'm saying that, regretting it already, because you're now thinking, okay, so now my pursuit, he's saying, without saying it, it's code word to look for. I didn't say that at all. Not everything I say is a mystery. Okay? Not everything that I'm saying is meant for you to go in and start thinking, he just said something. Let me start cracking the code. It's this plain, simple logic. Your choice of PD array is perfect for you at this moment in your career and your development. It doesn't mean that that's going to be the one that you stick with all the time. But once you learn how to use it, you have that behind you now. It's in your belt, okay, your utility belt. It's in your toolbox as a trader. And then you explore the use of another PD array. And over time, you might have 2 or 3 that you got really, really good with, but you'll learn how to use all of them to agree that the trade you're in is still good. That's the graduating approach to using what I'm teaching you. Find one to start and get a baseline understanding. You have to have a beginning baseline. How often does it deliver? How many times is it delivered at that time of day? What time of day? The opening, 9:30 to 10 o'clock, that opening range. 1:30 to 2 o'clock, the PM session, opening range. London, you start the day with true day at midnight to 12:30. That first 30 minutes. That's how I started trading the Globex with currency futures. That was my opening range. That was it. It still works today. It still works today. ICT, what are you going to do when they make NQ? They take away the stop in the afternoon. They're going to change the algorithm. No, they ain't. Because they cannot hide liquidity. There's always going to be inefficiencies. And there's going to be people that did something wrong. And I know what they are doing when they're doing it wrong. I told you, I got tricks I've never shown before. It could literally turn everything upside down, and I'll still be out here doing what I'm doing right now. That's confidence, folks. You can't buy that from a course. You can't learn that from a mentor. I've been doing this far too long to worry about what they're going to do to change it because they don't like I'm teaching people how to become rich. The cat's out of the bag, baby. CME, kiss my ass. You can't stop us. You can't stop us, period. Put that in your pipe and smoke it, you sons of bitches. You can't stop us. You can't do shit to stop us. If you're in charge. Yeah, you ain't doing shit. You ain't doing nothing. Make the market move all around. Do it. Move it all around. Clear the board. You can't keep it up because those large influx of flows that come in that you want to get those fees from when trades are taken, they're going to dry up. You got to calm that shit down real fast. You got to calm it down. Bring that volatility back in check so these large institutions feel comfortable again because they're not comfortable right now. These are all little storms that last for a short period of time. As a new trader, you don't see it that way. They're changing the world's algorithms. No, they're not. They're disrupting things. Of course they're doing that. But that doesn't mean they're changing things that you're going to be using in the future for the rest of your career. So what if they do away with a new day opening gap? I got tools that they don't know I got. There's things that are just tucked in behind the code, just behind that source code that they don't know shit about. So I ain't worried about that. And neither should you. You have other things that you could be doing besides that. There's other things I taught you besides the new day opening gap. There's nothing for you to worry about. There's no fear that you have to concern yourself with. Nothing. You shouldn't be obsessive about nothing, period. Long and short is, all of these PD arrays in concert with very specific pools of liquidity within specific times of the day, days of the week, Monday, Tuesday, Thursday, Friday, beginning and end of the weekly range. What happens if it's quiet on Monday and Tuesday? Well, you know what's happening on Wednesday and Thursday. You're going to have range expansion. Where do they lead the relative equal highs and lows on Monday and Tuesday? Because that's what they're going to gun on Wednesday and Thursday. How do you know that? Well, I know with a 90% likelihood it's going to happen like that when the economic calendar says there ain't nothing to worry about on Monday and Tuesday, but Wednesday, boom. What happens when they have CPI and PPI? You know, nobody can predict that. I don't try to stand in front of it. When I was younger, I tried. And I was picking up my ass with broken fingers and missing teeth. It's not fun. It would cleanly sever you. Let it happen. Let it happen. See what they left. Because the first point of indication you have right there, as soon as they rip that market higher or lower, the lower high that formed at 8:30 when that news report comes out, that's where they're going to take it back to. Because they know somebody gambled. And they're going to come back there and knock them off and keep running over top of them and go the other direction, or go back in the same direction and do half of the move that the report came out, or continuously go in that run after the report came out. These are things that can't be hidden from you, folks. But see, you don't think that way because you're looking for the Reaper, the Wraith, the Silver Bullet's second cousin. You're always looking for something new that this is going to be easier for you. Notice it's not getting any easier for you. It's still staying the same. But I'm giving you a menu to choose from how you're going to sit at the table and eat. How are you going to do it? What utensils are you going to use? You're going to feed yourself with a butter knife? Or are you going to use the spoon? The fork? Think about it. It's etiquette. You have to use proper etiquette when you're dealing with the marketplace. Which PD array are you going to eat off of? When you get down, you sit at a nice five-star restaurant, you don't sit down and say, hey, you, take a look at this. I'm here. Watch this. And start just grabbing whatever you want with your hands. Or eating with the wrong fork. Instead of a salad fork, you're eating with the entree fork. You're messing things up. There's an etiquette to it. And you have to know what your model and what its approach is and how it's used. That's etiquette. You're not trying to do things outside your model. You're not trying to do something that you're not supposed to be doing. All of these setups I've mentioned, these conditions, they have an infinite level of yielding supply to you. I could remain silent for the rest of my days on this earth. And what I've said to you today, for those who have been with me for a while, and you understand what I said, because I know some of you are brand new, you're like, I have no idea what this guy's talking about. Why is he yelling? to get your attention because I know some of you are falling asleep or bored, grabbing you by your lapels and shaking you. Listen, you're looking at the wrong things and obsessing about the wrong stuff. This is what you should focus on. That's what makes me ICT. I know what time it is. I know what time it is. And I also know what time it's going to get there. I'll never teach you that. But I can teach you when it will start. It doesn't do anything to me. Can't get in any trouble doing that. Bottom line is, you're seeing my students doing it. And there's a new influx of new students proving they can do it in their own hands. I'm not guiding them. I'm not guiding them. They have worked for it themselves. They put the time in. They've worked on studying. They back tested. They don't care what anybody else says about me or whatever I taught. They don't care about that stuff because they have seen enough. The little bit of study they've done, they say, I see something there. I'm not going to let go of this like a pit bull in a pork chop. I'm not letting go. I'm not letting go, damn it. I'm going to figure this out. And you need to have that tenacity. Because if you don't have that tenacity, you won't make it here as a trader. I don't give a shit if you're learning from me or someone else. I don't care. You need to know that this is for you. No one's taking it from you. Try me. I ain't never letting go. That's your attitude. That's how you're supposed to have it, that mentality. If you don't have that, you need to muster it. You need to build it up inside you and say, you know what? This is from me. No one's taking it from me. And I'm not going to be denied. You can't. You can't withhold this from me. When you have that, unstoppable. Unstoppable. And then when you have the model in your hand and you know exactly how you're going to perform with it, you have no idea. You have no idea the potential you have then. Every goal that you ever set, smashed. Every goal that you ever imagined within your reach, smashed. And you look around and say, man, I did not have high enough goals. This was too easy. This was too easy. But while you're going through it, it seems impossible. It seems like you're never going to get there. You'll never get there if you quit. If you listen to other people, you're never going to get there. You're inviting people that are stupid. They're ill-informed. They have no idea what they're talking about. They're not doing it, so why are you even listening to them? They're not doing it. So why are you taking other people's advice that aren't doing shit? If they're not doing better than you, they don't have any opinion on how to make you better. But you all listen to that stuff. Cut it out. Cut all that stuff out. Go right to the core of what you're doing this for. You want to be self-sufficient. You want to be able to make this money on your own. You don't want to listen to me. You don't want to listen to anybody else. You don't even want to be on social media. Fuck these people. You don't want to give a shit about what they say about you. You don't care. You don't give a shit if they see what house you live in. You don't give a shit what kind of car you drive, how much money you got in the fucking bank. You don't care about none of that because you're living your life. You're taking care of your family. If it fucking offends you, I don't give a shit. Move on down the fucking road because this is where the rubber meets the road, folks. No one's going to protect you. I can't protect you. You're going to fuck it up if you fuck it up and you did it in your own hands. But if you do the due diligence and say, I'm cutting all the bullshit out today, I'm cutting it all out. I got no excuses now. He said it. I got no excuses. It's there. It's in the charts every single day, every single week. What am I going to do with it? Not one of my students is doing everything I ever taught. Not one of them. The ones that are millionaires, they found one thing that made sense to them and said, fuck everything else. I don't need it. This works. This works. It works in my hands. I don't lose sleep over it. It's what I needed the whole time, and I recognized it, and I don't tinker with it. I don't try to improve it. It delivers. Done. You don't go in and tell your boss, you know what? I worked last week. I said to myself, you know what this guy needs? I need to fucking work for half my salary. I need to do my due diligence to make this company better. Fuck it. I'm giving half of my time, half of my salary for my time because you know what? I care about this company. Fuck no, you're never going to do that. You're never going to do that. But that's exactly what you're doing when you half-ass trying to learn this. This is the hardest, easy money you've ever made. And the only thing that complicates it is the person you see in the mirror. How long are you going to let that person in the reflection of that mirror hold you back? You got to tell that person that you're looking at in that mirror, why are you dragging ass? Why do you keep messing us up? Move out of the way so we can get there. It doesn't matter who else agrees with us. It doesn't matter who else believes in us. I believe in me. I believe I'm going to do it. You may not see it yet, but when I look at you again, months, weeks, years from down the road, you're going to see what I already see because this mirror lies. It's showing you something that you don't look like when I look at you. You think you look like that person in the reflection of that mirror. You don't. You don't. It's backwards. And it's not shocking when you think about how we think ass backwards. We think about things backwards because we don't think we deserve it. Bullshit. You deserve it. The fact that you're still listening to me, bloviate. You know you want it. You can fucking taste it. It's ready. It's within grasp. You know it's there. You just gotta keep digging. And it's gonna happen for you. It's going to happen. You think fucking Kyle didn't feel like he was defeated a couple times in the beginning? Of course he did. Kane, you think he couldn't fucking have a bad day and think, man, this shit's never gonna happen for me, bro? What's going on? I have dozens other ones that I'm begging for them to come forward. Not because I'm selling a mentorship, but I want them to know that, want you all to know, they're not the only millionaires. They're not the only millionaires. But they don't give a fuck about you. They don't care about your opinion. Why? Because they're living their life anew, brand new, new step, new spring in their step.